Gold broke another all-time high yesterday and up $100, which is, I remember I was talking to my son Max about $100 gains, and before this latest run, I think it only had happened once or twice in my career in 16 years where it would gone up $100. And now it seems like it happens every 2 weeks.
Yeah, no, I mean it's another live stream and another gold all-time high. I mean
we've actually had like $400 days in the last 10 trading days.
$400 days in the last 10 trading.
4 singular over $100 moves in the last 10 trading days. So it's unbelievable, and we'll get into that. But yeah, you're right, Colin. It's basically just what's going on.
So we've had clients buy from us 30 days ago that are already seeing pretty good profit.
Yeah, absolutely.
Oh yeah, like 10%, over 10% in the last month.
I've had clients before the metals even get delivered to the depository, they're up big.
Yeah.
Right. Before we can even fulfill the order that they placed a couple days ago, we were seeing huge moves.
Yeah. It's exactly. Been unbelievable. So Micah, why don't you take us through? I know you got some.
Yeah. So I prepared a little deck as usual. I like to do my metals and market update for you guys. So we're going to cover what I think are some of the more salient and topical kind of issues right now. So we'll get into trade issues with China, gold new all-time highs, what's going on with the US dollar, and just talking a little bit about interest rates and what we can expect from the Fed, and some news around that. So here's a gold chart, just showing you like the move that we've seen really since the beginning of 2025. It's just gone vertical. You can see here I've got lines across, which are all Fibonacci levels, and not to get too complicated, but in trading, you can expect to see these various Fibonacci levels hit as long as one holds the price down. If it ever breaks, you expect that next line to get hit. And Fibonacci, it's a sequence, it's a mathematic sequence that's found in nature, but in trading, it's used very effectively to determine price levels, both up and down. And so, once we broke out of that $2,100 range last March, it's just been on a tear. It's just been on an unbelievable tear. We can see that it based around that $2,000 mark for 4 years. This is a cup and handle formation, classic, the big cup, the little handle. Once that handle gets taken out, it's one of the most positive and one of the most impactful technical analysis, technical formation. So we've just got this massive run here.
What's this 261%? What is that?
So
what does that correlate?
I'm trying to find the words to explain it. It's essentially, it's a movement from the beginning. It's a percentage move from the beginning of the breakout point. Now, these are called Fibonacci extensions. It doesn't actually mean it's a gain of 261%. It may be a little too technical to kind of boil down here, but these are just key levels that we can see from the breakout point to the upside. They're called Fibonacci extensions. And so they actually act as a little bit of resistance and support. So we can see that we went from 2,000 to about 2,400 where we stalled through the summer. And we're actually hitting that 261 right now at around $3,400. So if we get through this zone, it pretty much says that we're, pretty much well on our way to that 423 Fibonacci extension, which would be like the $4,700 range.
Is it factor like the velocity or the speed of how quickly it's moved through those?
Pretty much. You would expect to see a breakout of a resistance level and then a retest, and then you can get to that next one. So think of them as like stairs. So you kind of do 2 steps forward, 1 step back, 2 steps forward, 1 step back. But we are just in a relentless advancing phase here for gold. But we are sitting right around that 261 fib level. So I think here, just a personal opinion, it would actually be something that I would welcome, would be to see the price pull back from 3,400-ish, maybe back down into the 3,000 zone. I think that that's important for a couple of reasons. We want to reset sentiment every so often. So there's obviously a price chart. There's also a sentiment chart. So sentiment is how people are feeling about gold and silver. And right now people are extremely bullish. Okay, but sentiment's kind of a contrarian indicator. When people are very bearish, that's usually the time to buy something. When something is very bullish, it usually means we have to let off a little bit of steam in order to reset that sentiment so that there's enough fuel for buying to continue to charge that price higher. So at this point, I would welcome a pullback. It would do a couple of things. It would reset sentiment, allowing us to go much further later in the year. It would also allow a lot of our larger clientele that actually have a lot of dry powder that are waiting to enter this market, but don't really want to buy in this like fear of missing out type of environment that we're in right now. They're waiting for a healthy technical pullback. 3,000 being that round number. Once we broke up above that, it just flew. I would love to see 3,000 be retested as a floor now, and we can just kind of run from there. I think that would get a lot of money back into this space, a lot of high value, high net worth clients and family offices that are just waiting for that perfect kind of technical entry point, which right now we're not in because it's just run too far too fast.
I think the hard thing is, and we were talking about this before we went on, is you have to sell with an idea of where you're going to put the money. Like where's the other option? I think the dollar's pulled back recently.
Yep.
So then the question is, like, what's your, like, if you pull back, like, where are you moving that money into? You're not going to sit in cash.
Right.
So I think that's sort of the hard thing about it. And then, I will say, like, we're, actively, President Trump is actively trying to negotiate with a lot of the, wars that are happening all over the world. But if anything were to break out this year, I think you would see a flight to safety. And so I think in a normal world, you're right. It's like, it's moved so quickly. I mean, that chart is really good because it really hits 1923 or 1924 up to, 3,400. And that's like the big run. And you would expect it to have that kind of, crater. But the thing is that I think it really comes down to what is the sentiment out there in the market. I don't know what you're hearing, Josh, but it seems like to me, I mean, you hear these big guys talking about $5,000 gold, and at $2,000 gold, it seemed crazy, but now $5,000 gold doesn't seem that unrealistic.
Yeah, we're closer to 5,000 than to 2,000.
Yeah,
almost, right? It's just scary how much it's moved. And I agree with you, Colin. Like, whether it's trade tensions, global uncertainty, economic uncertainty, weakness in the dollar, recessionary signals flashing red, maybe escalations in some type of global geopolitical conflict, whether Russia, Ukraine, or maybe the Middle East. There's so much fuel to still be added to the fire. It means that the price could run a lot higher, right? When you look at a technical chart and you think, okay, it's due for a pullback here, doesn't mean you're going to get it. Yeah. Now, it might be helpful, but you also raise a really good point. It's like, what else is as safe as gold?
Right.
On the appropriate time horizon, we still have a long, long way to go. I've shared my long-term precious metal gold chart where I think we're going to like 8 to 10,000 within the next 3 to 5 years. So there's still so much upside. There's still so much runway. But we're not, if you're a trader who's waiting for an appropriate entry, you're probably on the sidelines right now. But if you're an investor and you're just looking to protect your wealth for the long term, right now still makes a lot of sense. We still have, again, so much uncertainty in the world and so much higher to go in the gold price over the right amount of time.
Yeah.
Yeah. And just to kind of touch on the sentiment here. So, gold and silver has really been in a stealth bull market for all of 2024. You weren't hearing about it like you are in the news, like we are now with gold hitting all-time highs. I mean, gold went from 2,000 to 3,000 and almost nobody cared. Yeah. Nobody was talking about it. It went up 50% last year, give or take, and nobody was even talking about it. So now that gold's hitting all-time highs, we're seeing a pullback in cryptos, we're seeing a pullback in the stock market. We're starting to see, gold and silver, the light starting to shine on it. And as we see the inflation get worse, as we see the trade wars get worse, I think gold is especially going to accelerate here. I think we're on our way to 4,000. I think we're going to see that probably in the next 3 months.
Yeah. Yeah. It's quite interesting. And I think, to say like last year it was quiet with it going up so much. In election year, it was a pretty big election. I think that swallowed up a lot of the news and people weren't paying attention. But it seemed like everything was going up last year. I mean, everything was going up, and then you finally saw the stock market sort of have this correction. Yeah, Micah, why don't you jump back into your chart here?
Yeah, and look, Josh, if we go to 4 before retesting 3, let's go, let's see it. I mean, ultimately, we're all investors and we're in this for the long haul. But this is just kind of, again, these levels, these key levels that have been hit. We've just been going through it like a hot knife through butter. Do we do that again through this area all the way to that 4,700? Let's see.